Hi traders, and welcome to proprietary MTF TPS strategy that you can use for both deposit bonus trading and general trading. First, we will start with how to place targets. So targets go to previous levels of support and resistance. You can use targets by using profit stops, and you can use targets by watching daily pivot targets. Stop loss placement goes like this. Stop goes below last most obvious swing low for long trades. For short trades, stops go above most obvious swing high, and stops can be placed below pivot point levels. I will also show you this on live chart so you can get a feel how you can do it. And have in mind that you are not robots, because you're human beings. You don't trade this system mechanically. You should always include the feeling of the market, how the price moves. You should try to protect your trades, guys, especially if market is being volatile. And let's hope that you will have success with MTF TPS. So this is how we go. As you can see, I have opened a 4-hour time frame. This is euro-dollar 4-hour time frame. And let's see the rules for long entries and stop loss placements, of course, with targets. The best, remember now, the best is always to wait that trend pullbacks. So whenever you see red above blue and blue above green, like this, they are diverged, you know that the trend is to the upside. But because price is going high here, you don't want to buy here. You want to see a pullback. So the best pullback is always when price goes towards blue and red. It will occasionally hit red and go up. That means that the trend is really strong. But I really prefer to touch, or at least very close vicinity to blue and green EMA. So this is, as you can see, this is a pullback. And let's say that you have opened a chart at this point and you want to take a long trade. Of course, you can take a trade here, you can take a trade here, but just for, let's say, sake of this presentation, I have marked this with a vertical red line. So you want to trade here. Okay, you know that the trend is to the long side. Red above, blue above green. Okay, and Heiken Ashi is blue. So you don't trade when Heiken Ashi is red. This blue candle here, Heiken Ashi, means that the trend is, we think that the trend retracement has been over and we can enter a trade to the long side. So Heiken Ashi 4-hour is blue. You zoom into 15 minute. Okay, so let's see. We will try to find this 15-minute, and it's very close. So here it is. So you can see it's always the best that 15-minute moving averages are congested. So it means that the trend has pulled back and now the price is waiting. So the price is in congestion mode. We expect a breakout to the long side because trend is to the upside. So here you can see stochastic has been already crossed from this part here. It's almost touching 20. So we might assume that we can take a long trade. When this candle closed here, this is our long entry. Same here, guys. Let's say that you want to trade, just for the sake of this presentation, if you see that the trend is very strong, as it was with euro-dollar, we remember we had a nice upward break touching the targets as I presented on session recap and analysis with other markets. For example, you want to take this trade here, okay, like this. So you had a pullback and price touched the red line. I told you I prefer the touch of blue, but if you see that the trend is strong, you can try this. And you see candle now is bullish. So we expect more to the upside. Okay, so let's zoom to 15 minutes. Let's try to find this here. Okay, vertical line, show. Okay, here, see, we had a pullback. Now we want to see, okay, you see here, the price has been touching this, but we might be late in a trade. Of course, if we timed the entry properly, we could have entered here. But you see, moving averages are not that, they're diverging to the long side, so it's best to wait. So where we could make another entry here, guys, this is your entry. Pullback, you see, price has been here. You see, stochastic is below 20 and from red to blue. So this could be your entry here. This could be your entry here. So let's say another possible 60 pips. So you see how it goes. It's very clear. It's very concise. So whenever you see that 4 hours to the long side, but 15 minutes is not congested, nor it shows bullish EMA alignment. It's always best to wait like this. You see, you waited here. Red was above blue, blue was above green, and here stochastic were below 20 and switch from blue to red. See, a lot of chances here. Also a chance to go long. See how stochastic was below 20, and see how the price, how the Heiken Ashi changed from red to blue. As I say, it's always best to see congested. Okay, so like that moving averages are congested. But if you go long, it's not bad that you see that red is above blue and blue is above green also in 15 minutes. Okay, for example here, let's say this example. If price were to the long side on 4-hour time frame, this could also be a long entry. Okay, if price were bullish on 4-hour time frame. Okay, but if we saw retracement, we don't trade it. So we just trade clear trend. Okay, so now I will show you examples for short trades. And here is the example for short entry. As you know, Heiken Ashi trend is always best represented when you see candlesticks like this. So these are good candlesticks. You see where I'm moving my mouse. So when you see a strong body with down wick to the downside here like this, it looks like trend is strong. This is not a strong trend, this candle here. We don't trade this candle like this. You see, it's like a doji. It's red, but it's like a doji. See here, when you see that red candle has upper wick and lower wick, it's not that strong trend. You might take your chance, but have in mind that these are best candlesticks like this. To the downside, they should not have an upper wick. They should be like this, okay, like this. To the upside also, you see, candlesticks are thick blue. They don't have a lower wick. So it's always best to focus on that. Red for short trends without a upper wick, and blue for long trends without a downward wick. So in this example, we want to take shorts, right? Why? Because green is above blue and blue is above red. So here we had a lot of chances to trade. You see pullback here. You see how this is excellent, guys. Look at this. Blue and red, while still a downtrend. Red, blue, red. These EMAs tell you the trend is to the short side. Let's use this example, okay? Okay, let's see how the candle is. Candle is good. It's trending. So here we saw a rejection, and we expect that the price will turn to the downside. Okay, now we zoom into 15 minutes. Let's find our entry here like this. See here now you see EMAs were bullish, but the thing is you expect now a congestion and change of EMA, and this is where it happened here, exactly this place. Well, you might have missed this entry because you see stochastic were not above 80. Well, it's up to you. Sometimes it might happen that stochastics are not above 80, so you don't take a short trade. But even if you did, you see it was a bit of profit. But let's use this example. Trend is still to the short side, right? Okay, here, stochastics are above 80. It's a pullback towards blue, and you see, bang, to the downside. There was some hesitation to move the price, but you see another 29 pips here. Another potential, well, more than 20, it's like 100 pips. See how it goes. It's very clear. But some decisions you need to be made by yourself. For example, like this, okay? Whether you will trade this, maybe I will, because 4 hours is telling me that price is really, really going down. You see here, it's going down, way below EMAs. EMAs are diverged, and you know that it will probably reach lower targets, guys. So what would you do? Okay, I would probably take my chances with a small entry. Okay, this system is designed to give you multiple entries, not just 1 or 2 per day. So because you're trading deposit bonus, you need to go with a high risk, right? So this is how it goes. Here, you can see it here. Okay, I might take my chances also. I wouldn't take this because you never take a trade that didn't touch at least, or it was very close to blue or or green on 15 minutes, because this is a shallow pullback. I don't like shallow pullbacks. I like bigger pullbacks. You have a lot of pairs to trade, so you will always see a bigger pullback. So like this, a better pullback. This is also a good pullback. But here, see, congestion, well, it's up to you whether you will take the trade. I would probably, but you know, per rules, you see, we say always that stochastic needs to go or be above 80. But here it was a first swing up after the retracement, so it didn't hit 80. Here, see, very good entries. Here also, very good entries, and pullbacks are also good. Not even they didn't touch only red, but they did go to blue and green. That is what I like to see. Okay, a healthy retracement. Okay, now we will switch on to targets and stop loss placement. So let's say that you have taken a trade here, okay, at this spot here. Okay, you have taken a long trade. Now, where would you place a stop loss? Obviously, this was very close stop loss, so I wouldn't go here. It's only 4 pips, of course. We never ever go with 4 pip stop loss. And this stop loss here, obvious swing low is 28 pips. So we can go with this swing low. So we always go with a swing low or pivot points plus 5 pips. So if we had taken a long trade here, I would have placed my stop loss 5 pips below this price here, so it would be like 33 pips. You can also watch indicators. This is how you can back test it. So if you click indicators list, and you will see the indicator named pivot 2. This is the indicator, my proprietary. I received it from my friend from Croatia, and he actually made this for me. So this is of course free with Admiral Markets clients, and of course that you might already have it, but since some of you are probably new traders and you don't know what this is, I will show you now. If you double click here, you will see this window. So we don't use Camarilla for this. Okay, Camarilla is something different. We use classic pivot points. So if you say that period is daily, so it should be on daily by default because you will be trading this intraday. You need to see the history. So you just click history, move slider to true, and press OK. So here you will see a history. At this time, this was a pivot point. This was support. This was the resistance. Okay. So you see, this is now history. It goes back. It's an excellent indicator because you can back test how the price behaved based on history. So here you can see that actually this corresponds to previous day pivot point, and I would definitely place my stop loss here. This example here will show you a short stop loss placement, and here we can always use history as we did with the first example. So pivot point, daily, history, okay, through here like this. Okay, we see a history here, and you see this is a daily pivot point. This was, well, we can say this is a last swing high. So let's see how this candle, okay, close here. So like this, it's like 26. Here is 47. So you can decide. If you place a dead stop, it means that is a final stop. You don't go never above it. So you can go with 52 pip stop. It's a bit of conservative stop loss placement, but I would probably go here. Again, your stops are usually in between 30 and 40 pips. And here you will be having like 31 pip stop loss. Because if this is 26 pip difference from the candle close and this candle's high, you will add 5 pips to it. So it's like 31 pip, okay? So that is how you place your stop losses. As for targets, guys, targets are always, you need to watch both 4-hour and 1-hour time frame and 15-minute time frame. So if you watch 4-hour time frame like this, probably here, if you had taken a long entry here, your next target will be your next level of resistance. So this is your next level. It's like 40 pips here. And on 15 minutes, let's see, on 15 minutes. So here, probably, it's the same. So it's like 40 pips here, right? Oh, it's more, it's like 49 pips. So this is your target, okay? So you watch both 4-hour and 1-hour. 4-hour tells us that resistance is at 1.1442. You zoom into 15 minutes. So 1442. Here, the target is here, target is here. It's the same, 1442. Well, basically it's the same. And here you can see there is 50 pip possible to make with this entry. Now, what would I do? I would probably place a profit stop. So if I see that the price goes up, okay, here like this, and here I would probably place my first profit stop here. Okay, so I will secure the pips. So if I had taken my entry here, it's like 20 pips, price pull back, broke through this, and I would probably go with 20 pip. I would place when it breaks like 20 to 25 pips of a profit. I would put my profit stop to break even plus 20, effectively securing 20 pips. And when it breaks this level here, and you saw here it went up, I would place my profit stop here. So once target is hit, you might either close your trade or wait a bit more to the upside. If momentum is strong and the place is going up, you just move your stop loss here. Okay, you can easily do that. Just move your stop loss here, and you will be effectively securing that 50 pips. Same goes for short trades, guys. So on 4 hour, you see here on 4 hour, next target is here. Okay, if you take in a long trade here, see this is a candle that goes. It tries to reach this support here. So support is 29.51. You zoom into 15-minute time frame. Okay, 15-minute time frame. Okay, like this. Sorry, 15-minute time frame again. But the logic is definitely clear. See, you made your entry here, and here you see 29.15 here. So here you need to watch the price. Okay, you need to watch the price. You want exactly the price towards this level here. Okay, see, it's like 78 pips. If you watch 4 hour time frame, okay, yes, it's 29.15. Basically, those are the same. Those are not moving. Those are the same for each day. It's daily pivot points, but it's better visible on 15 minutes. So here you can see clearly your next target is here, both on 4 hour and 15 minutes. And whenever you make like 20, 25 pips, if you see that the price is going over, book it or try to make a profit stop. Try to place your trade at break even, so you're riding a free ride. But one thing is for certain: if I see that the price has broken this support level, like in previous example, and it tries to go down, I would definitely move my stop loss here. Maybe we will get a new momentum and price will drop down towards the next level of support. We don't know that, right? Because we are not moving the market. Market is moved by other forces. You probably know that already. If you don't know, try to visit our webinars, so you will learn which forces are moving the markets. So you just can, let's say, hope for a new momentum. So you made your, let's say, 70 pip from this point on, like 80 pip, and you want more, right? So the only thing you can do is secure your profits. Price moved 5 pips below your support, move your stop loss to this level and wait for a possible momentum. You never know. Maybe there will be momentum, maybe there will be not. But the thing is, you should be able to make pips with this strategy. I hope that you enjoyed, and I will see you soon. Cheers and trade safe.